Hey everybody, Jake and Gino here, and we have a serious question today. And that question is, are you prepared for the future tax reforms that are coming down the line? Gino, can you ever be prepared?
Jake, I'm going to say this. I want everyone to hear this. I've got 6 kids. I rarely promise anything to my children. I've learned that. No promises. But there is one promise I'm going to make to everyone listening to this. I will promise you, with $6 trillion of additional money being printed and thrown into this economy, guess what? Taxes are going up, baby.
Unfortunately, it seems to be the case. And there are three specific proposals right now that are on the table for real estate investors. So let's get into those. Three that I'm scared of, to be honest with you. Number one, the most obvious, capital gains. Everyone sees it. Capital gains could be going up somewhere in the ballpark of 40%. Gino, hey, I'm not a mathematician, but to me, that sounds like a 100% increase from where the current levels are, right?
And Jake, this is an opportunity for all you real estate investors out there, because there may be people out there that are saying, you know what? I got to sell my deal before capital gains goes up. And what do you need? You need liquidity. That's why the dual asset strategy is so powerful. We need liquidity out there when there's an opportunity to get there, because we're seeing a lot of deal flow in the last couple of weeks. And we're thinking that, wow, people are really preparing themselves for these tax increases.
The next one is the removal of the 1031 exchange. It seems to be a current theme here that there's an attack on generational wealth.
Yes.
You're seeing capital gains going up. You're seeing the potential removal of the 1031 exchange. So that's the second one. The third one that I think that many people may not be too familiar with, but is actually the most devastating, is the removal of the step up in basis. So Gino passes away. He passes a property on to his son. Well, there's a step up in basis to the current value. Therefore, you're not paying taxes on it. You're paying taxes on future capital gains.
Mm-hmm.
What happens now in the current proposal is, if Gino bought a property for $1 million, he passes it to his son and it's worth $5 million. His son then needs to cover the gap of that $4 million and pay tax that year that he receives it. This is going to be devastating to families. So what do you do? That is the number one question. Now, this stuff hasn't gone through Congress yet, but I think there's going to be a solution on the table if this does go through, because we're about generational wealth here. We're about long-term thinking. And one of the ways to help your family out, if that's the case, is to have a nice death benefit in place. We like to call it the dual asset strategy. We're buying a whole life policy. We're basically borrowing from it to put it into a real estate deal. And then we have that death benefit later in life if we need to cover something for our estate to make sure that we're preserving everything that we've built during our lifetimes.
And that is awesome, Jake. Think about that. You have death benefits and you have living benefits. That's what you want. You want that liquidity, because deal flow is going to be happening right now with all these changes. You have people who are elderly. They don't want to leave their properties to their kids because their kids can't pay those taxes. So what we're saying here is, let's prepare for the future. The 100-year mindset is really important. 100-year mindset is all about thinking long term. How do we prepare for the long term? We're not making decisions just for today or tomorrow. We're looking 5 years out and 10 years out, and we're trying to preserve that generational wealth. We've worked so hard for it. Everyone who's listening to this right now, you guys are all out there humping it and crushing it and putting in 50, 60, 70-hour work weeks. You want to leave something. You want to leave a legacy to your family. What happens at the end when 50 or 60% of it is gone to taxes? We have the solution, the dual asset strategy. Go to 100yearrei.com. It's 100yearrei.com. Take a look at the solution. It's the dual asset strategy.
And Gino, the last point before we sign off, the reason it's so important, it's not going to slow your deal flow down now, because you're getting the policy, you're borrowing from the policy to keep your deal flow up, because we think there's going to be and we're already seeing it. We're seeing an increased amount of deal flow right now because people don't want to pay the potential future capital gains tax. So they're selling right now. But on the backside, you're covering your future generation, because you're going to have a death benefit in place if the capital gain and the step up in basis goes away. So you'll be able to cover future generations while keep deal flow going now. That's why it's such a powerful strategy.
So once again, just go to 100yearrei.com, schedule a call with one of our advisors, and it's all about getting the information. We want the information and the knowledge, and stay on the front end of it. This is what it's all about, being a 100-year real estate investor. You want to have the knowledge and you want to have the education. Remember, education times action equals results. Thanks, Stenzi.
You can't sit on the sideline for this one, because that's it may not be you, but it's going to be your kids that end up paying for it. So
Take care, everyone.